Hello, hi, good evening, everyone, and welcome to tonight's webinar. Can you all hear me? Just want to do a sound check. So if you can, just go to the chat box and key in yes. The chat box is located on your right. Okay, great. Sound check is good. So once again, good evening, everyone, and welcome to tonight's webinar. Tonight's webinar is titled Key Asset Classes to Invest in Given the Current Environment. I hope you guys had dinner already. This webinar will start from 7:30 all the way up to 8:30, followed by a Q&A, a short Q&A question. So we will probably wrap up everything before 9 o'clock, probably 8:45 or so. So let me start. Tonight's webinar is part of a series of webinars from Learn from the Pro series. So this Learn from the Pro educational series is where we gather industry professionals to share with us interesting insight and their vast experience. So I just want to do a quick intro to the webinar contributors. Over here, you can see the 4 professionals we have. Tonight, we have Wong Konghao with us. Later, I shall introduce him in more detail. And part of the webinar series, including articles contribution, would be Mr. PC Low, Mr. Goh T Ling, Mr. Ivan Ho. And you guys will hear more from them and see the written articles. In fact, if you go to the website right now, Ivan has already put up some very interesting articles. So after tonight's session, make sure you check in to Learn from the Pro website, and you can read some interesting articles from there. Okay, the question is, how do you get to the website, right? So over here, this is a URL, driven.cgs-cimb.com, or you can scan the QR code. Okay, so I guess those of you who are already logged in right now have already found this site and log on. I just want to let you guys know again, you can always go back to this site and there'll be more webinar upcoming. And also just to remind you guys, if you are not in the know yet, CGS-CIMB is organizing the biggest campaign of the year. This is a chance for you guys to win a Tesla Model 3 at the end of the year. So this campaign, there's 2 parts to it. One is the monthly draw. So if you trade with CGS-CIMB, every month there will be a contest where you can win many Apple products, including MacBook and iPhone. And at the end of the year, we have the grand draw of the Tesla Model 3 electric car. So if you are not a client yet, not just go to the website. On the second page, you can see register now. So you just need to put in your particulars and our colleague will get back to you about opening an account to trade with CGS-CIMB. And how to get to the Learn from the Pro website. So it's the same website, but now on the right-hand corner, you can see that there is a Learn from the Pro title. Just click on that and it'll bring you to the Learn from the Pros page. So you can see that tonight webinar is there. If you scroll down furthermore, you will see the upcoming webinar where you can register. And when you do click register, you would go to the Driven to Learn website where you can register for the 4 webinars for Learn from the Pros, as well as many, many other webinars that we have organized for you. And also another very interesting news for you guys is today, you can also participate in the short contest. Participant for tonight's webinar, you can actually win points where at the end of the month, if you are in the first 100 runnings, you can actually walk away with a $50 Takashia voucher, $50 Takashia vouchers, and it's very simple to do it. So let me just play a short video on how to do it. This one is more for the mobile app, but it's a similar principle for the website as well.
Want to win $50 Takashimaya vouchers when you learn from our free investing and trading webinar? webinars? You can simply register for our webinars, log into the Attendee Hub, go to Community and click Join Game. Stay engaged and see how you rank on the live leaderboard. Answer polls, ask questions, submit feedback, and more. Only 100 winners with the highest scores will win each month. What are you waiting for? Click Join Game now. Terms and conditions apply.
Okay, so just click if you participate in the chat, if you participate in the Q&A, if you participate in the poll, all these actions will actually bring you points for the Takashia voucher. So don't lose this opportunity. Just be active and ask a lot of questions. So before we start the presentation proper, let me just go through the usual disclaimer. Basically, tonight's presentation is for educational purposes only. All information presented are that of the presenter and not of CGS-CIMB Securities Singapore. So when it comes to investment decision, always do your due diligence. All right, I'm very glad and happy to be able to introduce to you tonight Mr. Wong Konghao. Mr. Konghao, I should call him Konghao. I've known Konghao for like, I think almost 10 years since the time he was on the sell side and now he's on the buy side. So every time I met him, I always learn something new from him. So I'm very excited tonight to just listen to what he has to share. But just let me go through a bit on his background here. Okay, Konghao actually has more than 25 years of trading experience in the finance industry. He is an investment strategist and he's now managing his own fund and is the founder of Wikipedia. He specializes in the study of behavioral science and market psychology. He is also an expert in risk management and is often invited to share his views on the market and to provide trading insights within the industry practitioners, fund managers, proprietary traders, dealers, and retail investors. His company also provides expert witness and opinion writing services in assisting lawyers in arbitration for trading disputes. So without further ado, I would like to invite Konghao to share his slides. Konghao, please.
All right. I think first of all, thank you, Nixon. And let me just check the slide. And give me a moment. Okay, I believe that you could see my slide, the first slide. If not, then you can just give me a nudge. Okay, so just want to formally welcome all of you for tuning in tonight. And also, very importantly, I want to thank you, Nixon, for inviting me to share with the audience tonight. Right? So tonight, we're going to discuss about what asset classes to invest in the current environment. I think all of us know that what's the current environment is a bit tense. What's the reason that it's a bit tense is because of the potential rise of the interest rate. So later I will present to you how it works and what are the asset classes that is best to be considered in a time of rising interest rate environment. Okay, so I want to thank you, Nixon, for giving me a very good introduction. So I will not just dwell in this, but basically later on, as we present to what I'm going to share with you, you'll see a lot of using behavioral science techniques to understand the market. So I have my part of disclaimer to share as well. So as I present the topic, we'll explore into different markets, and during the Q&A, you can ask me about the different markets as well. So you have to understand whatever we discuss here tonight is not of the view of the organizer, or even my view is meant for my personal consumption. So if you kind of be influenced by my thoughts, my presentation, you want to act on it, please consult your licensed brokers or your licensed FA. Right, so I just want to give you a framework of what I'll be sharing tonight. So basically, a few parts here, I think 4 parts. Now, first of all, we're going to discuss about the current environment, which is without a doubt, the current environment is the potential rise of interest rate. And I suspect that this rise is not just going to be one time. So So it's going to be continuous rise. So very quickly, we just discussed that, just a few slides. My insight, I've been presenting this topic since a few months back, and things are still the same, but there's a lot of add-on to it. There's a lot of add-on knowledge to myself as well. So later on, the second part, I'm going to discuss about, in fact, knowing that there's a lot of uncertainty ahead, and we know that which market is the most bullish is the US market. But yet, I think the most important thing as an investor, you have to identify who you are. What is your identity? Then you act according to it. Are you a long-term investor? Are you a short-term investor? Or are you a short-term trader? So later on, I'm going to unpeel one by one, because you have to know who you are. Once you have your identity, then you're able to act according to who you are and what the market has to offer. I think it's really interesting there that I will also share with you what are the different type of asset classes. Then later on, I'm going to share with you some of the investment strategy in the current environment, which is a lot of uncertainty. Yes, I think the Fed is going to raise the interest rate. We're going to discuss that. But how are we going to handle the situation in the near future when they start to hike the rate, and especially the rate is going to be continuously higher? Okay, so how are we going to handle that? Then, of course, I hope that we have good time of Q&A as well later on. Okay, just move on to the very first one. What is the current environment today? Is really the coming rising interest rate environment. Now, just to give you a lot of us got mistaken that now this one, what chart is this? This chart represents the Federal holding, their portfolio of their own US government bonds or the US Treasury securities. That means the Fed, they are investor. Just like our Singapore MAS, they also invest. So Federal, which is US Central Bank, they also make their investment. Now, in their investment for the US Treasury debts or the US Treasury security, what is their holding today? Now, the one in circle that was in 2008, it was then the number one position was China. But today, a lot of us still mistaken that China is the number one investor of US bonds. No, the answer is wrong. Today, the number one investor, the largest investor in the US bonds today is none other than US Federal or US Central Bank themselves. Now, this chart represents the US Central Bank or the Fed holding the US debt only, okay? So there's nothing to do with China or Japan. But you could see that 08, China was number one, but today, Federal became number one. Their holding as of June was about 5 trillion US dollars. Now, what actually happened here was 08, China was still the number one position in investing in the US debt. But something had happened, and it's still happening right now, that because of the Wall Street meltdown after 2008, the Fed did something that's very unusual in a large, huge, sizable quantity of investment. Fed invested or buy into treasury bonds. Of course, it's very complex, but each time you see the action QE1 and 2 and 3, the portfolio increases. And last year, when the pandemic hit US, then Fed, or rather Trump, very quickly came in with the Trump CARES Act. He injected about 2.2 trillion US dollars. There again, the Fed, I mean, the money have to come from somewhere. So where the money come from? So basically, Fed printed money and to buy the bonds, so that to provide liquidity and funding and supply, cash supply, lifeline to the whole economy of US. Okay, so now you can see that Trump X, that was in March last year. So once again, the US Fed, the portfolio of the US debt increases. So is Biden in March, the 1.9 trillion American rescue plan. So now in the pipeline is the infrastructure plan. So as long as a lot of my friend asked me, so Konghao, what do you think about the US market? I say that likely is still going to go up. So what am I reading at is that as long as the Congress and the Fed, they have the ability and the capacity to roll out more bills and more plans and more, the Fed have this relationship, as long as it can continuous, each time of the bill is being passed, you could see that the stock market go up. So as long as they can continue to function that way, I think the US market should be fine. Okay, but I just want to let you know what's happening here. But the thing that with all this printing of money, what's the effect of it is that when more money is being printed, I'm referring to US dollars, definitely the US dollars will be diluted. Diluted means that over time, as more money is being printed, more quantity, this worth of US dollars will not worth as much as before. That's what I call dilution, or in short, I believe that US dollars will be weakened. If you study into the US dollar index over the last 40 years since they started all these in Ronald Reagan's time, that the US dollars has been declining until today. Now, so as it declined, so what happened here is that maybe in Asia, or at least in Singapore here, we don't really feel that there's inflation, but surely enough that in US, in fact, a lot of the raw commodity prices, the food, I'm talking about the exchange prices, the corn, the soybean, the cattle, the red meat some has been half higher, some has been doubled already, 1/4 increase. So as the US dollars weaken, commodity prices increases, and inflation is really real in the West, is especially real in the US. Maybe you don't quite feel it today, so perhaps our the body have hedged, or our dollar is strong enough. Okay, but I just want to share with you the next slide here, which is this slide, is that this is a study of the last more than 100 years of interest rate. Now, if I'm going to share with you the 200 years of interest rate, that even 200 years they are cycle, but let me just narrow down to about 100 plus year, that you could see that the last cycle that was before World War, that was about 20 years cycle. But this year cycle, I believe that is a 40-year cycle. You can see it very clearly. As of 2020, it was 40 years down. It represents the interest rate trend, the cycle. That means the interest rate hit the higher in 1982 and all the way down to current. And I believe that what I explained to you, the macro environment earlier, as more money is being printed, it weakened the US dollars. As the dollar weakened, I just want to remember the flow. If you can copy down here, is that as more money is being printed, US dollars will be weakened. As the currency weaken, commodity prices increases. When commodity prices increases, that's called inflation. When inflation comes, Fed will have to hike rate. They have no choice. Okay, so there's a reason why they are holding it so dearly. Later on, I'm going to explain to you. There's many factors, but one of the key factor is that, which I'm going to share with you very shortly. Okay, so now I suspect that we are coming to an end of very low, ultra low interest rates. So just be mindful that I suspect in the next few good years to come, the US interest rate was set to rise. As US interest rates set to rise, the rest of the nation, the central bank, will also have to raise their interest rate. If not, then their dollar, their currency, their own currency will be not too competitive. They also have to raise the interest rate as well. So now the other factor about them, you may ask, what's the big deal about raising interest rate? Now the thing is about interest rate and the stock market, the capital market, is inverse relationship. It means that when US interest rate fall, or interest rate fall, economy or stock market especially, it will go up. So similarly, if the interest rate rise over time, the stock market technically should fall. So of course, that's a concern why the fund managers around the world, the capital, people into the capital market, they prefer not to have a rise of interest rate. That's a reason, because then it will be very difficult to plan for their investment. Okay, so I just want to let you have some understanding about what is the environment we're facing right now. Now, next, I'm going to go into profiling. Now, this profiling is very interesting. And I would say that this character, her name is Catherine. And this Catherine, I just felt that it represents about 70 to 90% of the herd mentality. Now, most of the investor and traders were herd mentality. But my whole idea is to point out to you that don't be the herd mentality, but recognize that 70 or 90% when the big crash come, they will become the 90% that lost money. But my whole idea is that we recognize that and be the top 10%. So, but first you have to know who you are. Now, this Catherine represents the large majority of the herd mentality trader, which is a large majority, about 70 to 90%. Now, who is Catherine? Catherine is someone that is not from the capital market, he's not banker, he's not a broker, but he is or she is from her own industry. She's smart, she's diligent, she's hardworking, she is someone, I would say, senior executive, manager, or even MD or C-suite. Okay, so she's hardworking, but she's an expert in her own field. She's an expert. Now, but she also know that investment is part of the deal, because come to 65, she will have to retire, or maybe earlier she got to receive a golden handshake. Then the rest of her life, she will have to do with the saving that she has to invest. So I will urge you that when it comes to investment, be as serious than your own personal field. If you're expert in your own personal field, but also take the liberty and ownership to be expert in investment as well. So, okay, which is important, because that's the other one-third of our lifespan that we will spend a lot of time in. Now, how you recognize Catherine is this?
Excuse
She
me,
is someone
Konghao.
that, yes, yes.
Konghao, excuse me. Are you showing any screen? Because all I
Oh,
see
no,
is a
no, no,
black.
no, no. I'm still introducing the
Okay.
character of Catherine. Yeah.
Okay,
So
so
now,
it's just a black
Catherine,
screen. Okay.
yeah, it's a black screen. I just want to keep you
Okay.
in suspense. Yeah.
Okay,
So
just want to double check. Thank you.
yeah. So now, so Catherine is someone that how I recognize Catherine is this. She always is among our friends. She always say this when she sold at a low, then the market bounce up. She always say, yeah, I should not have cut loss. I should not have sold. I should not have sold. When she bought around the high, she always say that, yeah, I should not have bought. After I bought, the market went down 20%. Then I became a value investor holding all my stocks. So she always have this vocabulary, which is I should have, I should not have. But you got to cancel all these I should not have. Take responsibility. But let's study about Catherine. Now look at her, is that she usually will like to hear what the broker say, will like to hear about hot tips, what the neighbors say, what the friends say, or what my colleagues say, because he seems like an expert to me. That's Catherine. So they will always follow. She don't have a firm view of her own. So tonight I want you to also recognize that once you're able to identify your own identity, create a very firm view of who you are. We're going to discuss that later on with all this investment strategy shortly. Now, so this Catherine, and she said that price dropped a lot already. My friends say it's a good time to buy. I will buy now. So she bought. After that, oops, it dropped. It's okay. I'll buy some more to average it. So she averaged it. Seems like a very expert, right? See, I'm right. Stress. When it broke the low, Catherine got freaked out and she said, help, cut me out, sell, sold. So she cut loss. The moment she cut loss, the market rebounded. Then she called the broker. Hey, do you think that the market know my stop loss, all this and that? It's always a common excuse. No, I do not think Singapore broker, they will take your stop loss and trigger. So I do not think that's legal to do that in Singapore. So, but exactly, it's the mass market, they usually sold around the low. So then she said that, please don't tell me I sold at the low again. Then the market traded sideways. See, I told you market is coming down. I'm right. No, she's not right. Market is continuing to move up. Then she say, I don't believe this. Never mind, I will wait for it to come down. I'll buy back again. So she's getting a little bit angry right now. But the market still don't wait for her, continue to charge up. Then she say this, I think I'm right all this while. I better buy now. I better double my volume what I've lost out the previous round. I better buy now, but I don't believe in stop loss today. I don't believe in risk management, or rather, if you don't like stop loss, fine, but I do not believe in risk management. But I better buy now. I want to double. I want to make back what I've lost, double the volume. If not, I'm going to miss it. The moment she bought, the market started to trade sideways and came down. Yeah. Then after that, she said, well, she'll call the broker. Is it a good stocks? Well, I've got good PE, good book value, good prospect. I think I'm a value investor because this stock is good. But the more she hold, the market continue to sink. So I believe that you will speak to many of us, but not to worry if it is you, that's my point tonight, right? You try to cross over to the other side, which it can be done, because I was once to be like that, and so is my wife. So we all been through the journey. So just recognize it, and we continue to work on ourselves. Now, so I'm just going to share with you, there are basically 4 profile types. So over the years, as I also got opportunity to share, I try to be very clear about how to break down all these investor and traders profiling, so that whoever to tune in, I hope they'll be blessed by my sharing. So basically, there are 4 types of profile. First of all, it's a long-term investor, short-term investor, short-term trader, and intraday trader. Now, then I'm going to ask you this question here, is that if you classify yourself to be a long-term investor, now, if you see a particular good stock, okay, let's say you analyze it yourself, and it's a good stock through broker opinion recommendation, then you really go and study about that stocks and you realize that the stock is really good. But now is no one noticed that the price is reasonable and you feel like buying for long term. Now, the next question I'm going to ask you is this. If you plan to buy this stock and intend to hold for the long term, may I ask you this question? How long is your long term? Okay, so now I'm not going to stress you because we have limited time. Before the pandemic of COVID-19, I have opportunity to do physical class and got a huge audience. I always take the opportunity to ask from class to class, that means the size by size. So I need to collect statistics. So I'll always ask them this question. So when you say long term, how long is long term? Say, for example, you invest in a new startup or new stock, you're not very familiar, or new startup. Now, my question to you is that how long will you give this startup the time before you find that this, of course, you like the proposal, but whatever business that roll up, you will need to give some time before you find that this new startup is very feasible before you continue to invest in the second tranche, right? So, but let's say before you invest in the second tranche, how much time would you like to give to this new startup? So collectively, I kind of gathered most of us will define that 3 years and more if I'm going to be a long-term investor. Okay, so we just got to fix a timeline. Okay, but don't be too rigid. It must be 3 years or more. But I just want to give you an understanding there are such a thing. So later, I'm going to help you how you plan what the asset class to choose for in this time of uncertainty. Now, so to me, when I see something good, an asset class that worth investing, let's say, for example, a stock, and I want to say for this particular stock, it is for long-term investing. So I'm very clear about this, and I hope you can join me as well. That means this stock roughly is going to be hold for 3 years and more, or to longevity. Means that anything happen within these 3 years, some slight volatility, provided that the core value that I believe in the stock don't change, is still the same, if not better. So all this minor volatility, it doesn't really bother me because I focus on the core value, the core goodness of this particular stock. I want to hold it for 3 years or more to see how. So in between all this volatility, it don't really concern me. So I'm very firm. Why? Because this particular stock is for long-term investing. Now, the next one is that how short is short term? So basically, I call it as 3 months to 3 years. Now, I don't have time to explain to you why 3 months because I want to move on to the strategy part. So for short-term investing, it will be for 3 months to 3 years. So I just want to give you this structure. So later on, we're going to move to the strategy part in this period of very uncertain time. What very uncertain time for those that just joined us? The very uncertain time is that the Fed likely is going to raise the interest rate. It's not just one time, but I think there will be a continuous rise in the near future. Okay. Now, then what is short-term trading? Short-term trading means that if you find a particular stock or instrument, you find an opportunity that it's time to buy or sell short, that you find that you want to classify as short-term trading, then the time frame, I would say 2 days to 3 months. Now, very quickly, why 3 months? Because 3 months, most of the I would say the derivatives or the structured product, there's a time frame for usually about 3 months. So therefore, I felt that between 2 days to 3 months, if you want to trade, the time frame, the holding period is between about 2 days to 3 months. Then, of course, intraday trading is within the day itself. Now, the next topic I want to dwell into it is that now you try to identify who you are. Now, who I am, I can be all the four. It really depends on the opportunity at that point of time given by the market and happen I chance upon it. I have to very quickly but calmly to recognize that how should I place this assets or stock into which quadrant. Then I'll act accordingly. Okay, I can be four, but for a start, you don't challenge yourself to be four because I have four portfolio basically. Okay, so what you can do is that you got to choose one and you enjoy the process. Okay, you try. At least then you will not be like Catherine, being a value investor but always lost money being a value investor. So you must have a reason why you want to be a value investor. You got to hold for 3 years and more. So in between this volatility, it's not going to affect you. It's not going to affect me because we know exactly who we are. Now let's talk about the asset class to invest. Say, for example, you're quite firm that whenever you see an instrument or a stock or assets that you've identified an opportunity right now, and you find that you want to classify as a long-term investor, means that you're going to hold for 3 years and more. Now, so what are the suitable type of asset class? Of course, there's a lot, but these are the few that usually I will consider: property, stocks, unit trust, ETF, bonds, or even some private companies as well, businesses, and etc. There's no end to all this, right? Now recognize that means when I put my money to it, or some of them may want to invest in regular saving plan. Some of the stock brokers, we have regular saving plan. If you like to do dollar averaging, you can do that as well. So these are for long-term investor. I remember I introduced this to my sister before, but she got no patience. She got no knowledge about investment, but she got no patience. Then she said it's too slow. Okay. Now, so these are for long-term investor, 3 years and more. How about if you happen to see a assets or stocks that you recognize that there's a potential buy right now, but you classify, that means you try your best to classify a time frame. How long are you going to hold these to see result? If you find that it's within about 3 months to less than 3 years, that's your time frame to take profit, to see a result and to take profit, then you're going to classify it to be a short-term investor. Now, what are the asset class? I classified them after so many years is that I classified stocks, unit trust, and you notice that property is not in my bag. So bonds is not in my bag as well. Okay, ETF, etc., and can consider derivatives as well. So I use derivative to hedge and to trade sometimes. Okay, because it's generally about 3 months to 3 years, and also understand that CGS-CIMB, they have a CFD department as well. Okay, so you can use them to hedge in the time of uncertainty. Now, the next one is that if you see an opportunity right now and you identify that, no, these are really for short term, is less than 3 months, between 2 days, I do not know, I'm going to buy today, but seems like there's oversold situation and market just rebounded, and seems like China today behaved like that, right? Just oversold and rebounded. But I don't have a firm view, say for example, maybe about just hold for a few weeks. Some of you maybe just the next day or few days, few weeks to about 3 months. Then you got to classify that this opportunity could be a short-term trading plan. So now short-term trading plan, you notice that, now notice the language that I used earlier. I say in the short-term investor, I say stocks and can consider derivative. But if I saw opportunity and I'm very clear that it is for a holding period, just about 2 days to about 3 months, means quite short-term, I would just go for derivative usually. Okay. Now notice the language I use: derivative and can consider stock if it's in such a time frame. Now you can dispute with me; it doesn't matter, because all of us, we have our own style in investing and trading. So I just provide with you my personal experience. So you can model after it, or you can take reference. But if it doesn't work for you, just take it as a reference. But set it as something that you can explore, because I believe that every instrument are designed for a specific purpose. For traders, we use derivative. For long-term investor, I will look at asset class like good stocks, properties, bonds, maybe unit trust, or fund, or ETF. Now, intraday trading, I will not dwell into it. Basically, the whole instrument is just derivative. So I just explore a few type of instrument. I'm just going to move very quickly because I'm very conscious about the time. By 8:30, I hope that, or stretch a little bit more, I hope to go into the Q&A, because I understand that this platform by 9 p.m. is just going to cease. It's a very interesting platform that we have, so which is also good. So we'll keep our time check. Now, so the other part before I go to Q&A, we're going to explore into the strategy part. Okay, so just let me have a drink here. Yeah, okay, tastes good. Okay, so now, before we discuss about the US market, the Singapore market, and then we go into what are the asset class to invest in the current environment, I also prepare the Chinese market because I think the last 2 weeks, the Chinese market is so interesting. So I also prepare the Chinese market, but not within this presentation. Maybe during a Q&A, I suspect that someone will ask me about how about Chinese market, that we will explore into the Chinese market as well. Now, so before I move into US, China, and Singapore market, let's talk about what I understand about the progression of most growing market. Now, what do you mean by the progression of most growing market? In every growing market, now market can be referred to a country, it can refer to a stocks. Now, not all stocks have, or not all country and stocks or stocks, they have a desire to grow. Some countries, they just want to make their product and feed their people. They are comfortable with life. They don't want to be too stressful. They do not want to grow. They just want to maintain life as it is. So for companies, some of them are like that. So some company, if you realize that these are income stocks, dividend stocks, they are not really have an objective that they must grow leaps and bounds. They just want to pay their customer dividend, ongoing dividend. So the share price always quite stagnated, but they are still good shares. Or it could be some of the companies that they don't pay dividend, but I still consider an income stock because they continue to use their earnings that they throw back to the company to do R&D. Okay, they just want to do that to set for growth, but there are stages. So my heading here today, before I explain about the strategy here, is that we have to recognize that in every growing, it must be growing market. That means you have to recognize what the stocks, what the countries that is, they have desire to grow. So you have to pick them. Now, in every growing market, I recognize that there are 3 stages. So I coined this concept by myself. I hope that it works for you as well. So it works for me very well. I just want to share with you. So basically, in growing market, that means they have decided to grow. There are 3 stages of development. First is called the income stage, followed by the value stage, and then finally the growth stage. And this growth stage will maybe perpetual. Okay, maybe perpetual. If the PE is not swing out by too much, it can be perpetual. Now, I'm just going to give you one example. Going to talk about Singapore stock first. Then later on, I think we're going to go to US. No, I'm just going to give you this example first. Then we go to US stocks example, then Singapore stock. But this is a structure, what I mean by a progressive stages in a growing stock in this case. Now, so this is iFast. I think if you're tuning in Singapore, you're quite familiar who iFast is. Now, so basically iFast, there are 3 stages. That's what I recognize. The first stage is called the income stage. It's heading nowhere for quite a long while, okay, but they do pay dividend. That's called income stage. Now, let me just define what is income stage. Income stage is this called stable companies with stable dividends. They are not too concerned, and you're not too concerned about market volatility. You're not too concerned about market volatility. So you have to recognize that if you invest into an income stocks or income ETF on a country, say China or US, you have to understand that if you have an idea that is for income purpose, it is investing into stable companies or stable country with stable dividends, and you're not too concerned about market volatility. Now, the next stage that you have to recognize is called the value stage. Now, how I define value is different from many others. Now, value stage, I will define as companies that are already trading significantly below its fair value, but it is about to enter into a growth stage. So to me, value is that you see something good right now, but the price behavior. Now, remember I said that earlier, one of my profiles, I study in the price behavior. So this part of the deal here is that it can be very calm, but suddenly the price push up. Now, you have to understand that the market always move with a reason. So say, for example, you recognize that there's a push up in price and you find that it's really interesting. Now, so I believe that at the point in time, you got to study the prices. Is it fair value? Is there growth prospect? If there's growth prospect, it means what? It means that it's the company that's trading significant below its value right now, as is circled there, below its fair value as it is entering into a growth state. That means you must have an expectancy that is about to grow. To me, value investing is that you see value right now because a lot of people don't see, but you expect that this market is going to grow. That's the expectation. So value investing is not passive. Passive means that you buy and hold and do nothing and you want to collect dividend. It is called income stock, income investment. Value is precision. So then, of course, this company, it entered into growth stage. Now, again, growth stage, there are few stages in growth stage. Of course, we all hope that we can get at the beginning of the growth stage. So this company, whether is it at the last day of growth, I'm not going to talk about it, but I just want to give you my whole ideas to give you an understanding. There's such thing as income stage, value stage, and growth stage. Now, who coined all this principle is after a while, long while observation, I find that it just fits so perfectly well in every growing companies. If it's slow right now, but you got to look at their prospect, do they have a desire to grow? If they have a desire to grow, likely it should enter into all these phases. But sometimes they may fail, so you have to understand that also. So I just give you an explanation about, I haven't give you an understanding about what is growing company. Basically, growth stage is that companies that is already trending with strong earnings and growth prospect. Already trending means that you can recognize structurally the high is a higher high and the low is a higher low. Okay, so that's called growth. So basically, I discover about income, value, and growth. Now we're going to talk about the US. So where is US today? Are they income, value, or growth? Then I'm going to talk about Singapore, and maybe during the Q&A, you can ask me about China. We're going to explore the China market as well. Okay, now, so this is a presentation I did with SGX last year, November, June 20. And during the presentation, we study about the price behavior. I just felt that out of all commoners, the market just surged up. So I find that there's a proposition back then. So after that, of course, that was here. The price was at, the price is at 1.37 at the point in time. That was June 2020, about slightly more than a year ago. And 1.37 was about here. So we recognize that there was a value proposition at point in time. So today the market is much higher. Okay, so we understand the concept about this. I hope you are enjoying this right now, that the progression of most growing market income in 3 stages. It must have a desire to grow, whether it's a stock or a country. So you have to recognize that. Okay, so the stages, but when you recognize stages, when you put your money down, what's my point here is that so you have to know at what stage you are and what kind of risk you have to take as well. Okay. Now then, let's study about the US market. Where is US market today? Where is US market today? Is it an income, value, or growth? Then we're going to go into the asset class of all the market. Now, for the US market, I just felt that in July, you have broke the all-time high at 35,000, and today is still hovering around there, July, August, right? So my question to you is that we discover about investor profile. We discover about, according to your investment profile, what are the type of asset class, what are the type of instrument. But of course, today I'm going to focus much more on capital market, about stock, ETF, all this and that. Now, so if you're attracted to US market, and it's very natural that most of the people, their head will turn towards US because it seems like the US stock market equities are hot right now. Okay, but you have to understand that. So how are you going to position yourself? Are you going to, if you were to get started in investing today in the US market, because suddenly you're drawn to whatever is hot. So it's very natural for human, right? So my question to you right now is that which strategy will you adopt? Now, remember just now we discussed about long-term investment. Let's put aside the intraday trading part, okay? Now, for US market, if you're going to invest right now, let's say you don't have a past investment, you do not build a base at the bottom, but now you see it's hot, you want to put in the money right now, which quadrant would you put in? Will you classify? Do you want to classify your investment portfolio for US market to be a long-term investing, short-term investing, or short-term trading? Okay, now I'm not going to stress you. I'm just going to give it to you right now. Okay, now, so basically for long-term investment, about 3 years or more, short-term is 3 months to 3 years, and short-term is 2 days to 3 months, short-term trading. Okay, now what I felt that earlier, I also said that the US market, we have to recognize what are the stages. If you are at the earlier stage of growth, so obviously the US market today is in a growth stage. Now, the growth stage, honestly, where the US market started its growth stage, in a macro front, it started in its growth stage since 1982. Just now we share about the interest rate, right? Interest rate peaked at 1982. As the interest rate moved down, all the stock market, most of the stock market, the indices went up for US market. So it started its major rally since 1982. So of course, if you're going to invest today, for long-term investment, it's always good that you invest a bit at the earlier stage of this super trend. Okay, or any major crashes you start investing and plan for long term. So I would suggest that since we discussed that the inflation is real and the potential raise in interest rate is also very, very real. So as of myself for the US market, I like them as well. But I will try to keep, that means every time if I find an opportunity, because remember in growth stage, basically it's a higher high and higher low. So whenever there's a good correction, my focus always zoom in to find where is the point of entry. So as I enter the market, that means I buy on dip. As the market swing up, which is currently right now, I'm also not so greedy about it because I kind of feel that it's at the last few stages of this growth. Because why? The interest rate is about to pick up and it's not conducive for the stock market. So I'm very sensitive about it. So whenever I buy into US stock, I'll try to position myself to be a short-term investor or a short-term trader. Okay, so not as a long-term investor. Okay, so sorry for those who like to invest in US for long term. If you start today, okay, but if you have positioned some years back, then you're fine. But if you start today, then you got to think a little bit differently. Okay, let me just give you some very interesting slides here, and some of the salespeople, especially, they'll say that they'll ask you to invest in US or US property or whatever. They say that, hey, look, Mr. Tan, if you're Mr. Tan, they say that US market over the last 100 years has been going up. Is it true that US market over the last 100 years has been going up? No, it's not. Okay, you could see that from 1920 about there all the way to 1982 the US market has been started, he started at 2005 and closed at 2005. So market has not been going up for the US market over the last 100 years. It only started to go up in 1982 when the US interest rate was high. As it moved down, the US stock market go up. Okay, so by the way, this chart, it represents the Dow Jones, and I switch it to the log chart. Log chart means that it's a measurement by percentage. So you're able to see the final print of the historic. Okay, so I would classify that US history in a macro front. These period are called the income stage. Is volatile, is heading nowhere. Okay, so but at the particular point it was a value proposition. Value proposition, why at a point in time? Because of the US became the reserve currency. It started in 1971 to about 1973 when oil is priced in US dollars. But it'll take some time for the world to recognize that. So in the 80s, US officially became the world reserve currency. That was at a point in time. Okay. Now, so after that, we have been in growth stage in the US market. So again, as an investor, I will really urge you to recognize, yes, you like growth. I understand that. But in the growing market, you have to recognize what stage of the growth you are in right now. Of course, the most ideal situation is that you invest at the beginning of every growth stage of the company or the country. Okay, so I hope that will give you some idea how to move forward in this very interesting and exciting market all over the world today. Okay, know where to place your chip correctly, where to place heavy, where to place a bit light and have a bit of fun. So to me, US today is more like having a little bit of fun there. I'll keep my mind really active, but I'm placing my chip somewhere else for the long term. Okay, I'm going to discuss that very shortly. Okay, so I just read this news today. Today's 4th August, but yeah, it's the 3rd of August news that they said the US debt soared to near 15 trillion last quarter. So now, it's a very difficult for Fed to raise the interest rate because a lot of households, they have this debt. Now, for the Fed to raise interest rate, that will impact all these borrowers. Can you imagine by raise by 25 basis point, and over time raised by 1 percentage point or 100 basis point, and the monthly repayment for the borrowers is going to be a burden. Okay, so there's always a resistance for the Fed to raise the interest rate, especially more and more is getting into loan. So it's very difficult for them. So, but we're investor, we are traders maybe. So, but we have to recognize where is it, what's the risk right now. Okay, so it's very tough decision for the Fed today. Now let's look at the Singapore market. Okay, so yeah, I'm moving a bit fast because I want to take on the Q&A. Okay, for Singapore market, it's really interesting here. Some of you say it's boring. No, I kind of disagree with you. Over the last 10 years, the Singapore market has been range bound between about 2005 to 3005, if you recognize it. If not, then you can always go to CGS-CIMB platform to look at the chart, and you look at the last 10 years. Basically, the whole ST has been range bound between about 3005 to 2005. But this 10 years, there are about 3 cycles. 2005, 3005, 2005, 3005, 2005, 3005. So there's about 3 cycles within this 10 years. So basically for Singapore stock is that you have to trade within this range over the last 10 years. So Singapore stock is never boring. If you can recognize the characteristic of that stocks or the index, then you act according to it. So for Singapore stocks, my position all the while, although I partner with SGX, I speak for them as well, but I always in the position is for short-term investing. Means that I have the desire to buy in the Singapore stock, but it's always hold 3 months to about 3 years. Then 3 years, I try to cash out. 3 years, I try to cash out. So then last year, about May 2020, that was an opportunity because the SDI have come down to about 2005 again. So there was an opportunity, right? So somewhere in August, an investment bank in Hong Kong called me up. They say that, Konghao, we observed that in July last year, 2020, they called me up in August. We observed that in July there in Hong Kong, that there is a lot of institutional all over the world through Hong Kong, because Hong Kong is a financial hub as well. Through Hong Kong, they have come into Singapore to invest in local equity. So they call me up, they say that, do you know why, and can you hold a session for us? I say, definitely. Okay, so it was well attended by 30 countries and about 300 participants, okay, institutional investor. So I say, wow, it's a privilege. I would love to share. And then the part when I share was October the 10th. And I saw the opportunity. There's bullish engulfing body here. There's bullish engulfing body here. And if you look closer, it's also a double bottom as well. So now all these chart pattern, it makes a lot of sense to me if you also infuse behavioral science into it, market psychology into it. But today I won't go and dwell too deep about it. But later I'm going to bring you into Singapore market. Where are we today? Are we income, value, or growth stage? For the last 10 years, it was at the income stage, but I felt that something have shifted. Okay, so yeah, so recent high was about 3,237, and we are still around there. Today is about 3,180, right? So we're still there. So there's a reason why, but I won't have time to explain to you. So later on, I'll give you the link where I did a 1-hour presentation to present to 30 nations about why they should invest in Singapore for the next 30 years. So that video, you can watch it after this event or this weekend. I basically present to institutional investor why you have to invest in Singapore for the next 30 years, because we are going to get into a growth stage in the next 30 years. So I need to come, I need to show them what's my conviction, what's my reason, and why. But I don't have time to explain that, but you can watch the video after this. So basically, what I felt for Singapore market over the last many years, it was at the income stage. Remember the last 10 years, about here, starting at 2010, it was range bound between about 2005 to 3005. But I felt something has changed, shifted. Please go and watch the video at the time. That I believe in the near and further future, we are going to set a trend. Okay, we're going to set a trend. It's not happening now, but the company are not listed in the exchange yet. But on the physical ground, you can literally feel that all the high-tech companies are already here. So I suspect in years to come, there will be more listing of the tech stock into the Singapore equity itself. So look for that. I'm a visionary, so I envision that I look at the macro, I envision that, and I also look at chart. So basically, when we look at chart, we are studying into the behavior science of what's happening to the market. So I have high hope for Singapore. No, it's not boring. I'm positioning well for Singapore market. So of course, there's a question of always buy not enough. So, but it's okay. I'm contented. Okay, so now if you were to start investing here today, which strategy will you adopt? So will you want to be a long-term investor, short-term investor, or short-term trader? I felt for Singapore market, there's a liberty for me to do all three. Okay, I will be heavy to be a long-term investor. I want to buy and hold for long-term, and maybe as part of my inheritance for my children. Okay, so yeah, so if you ask me how long, I don't have an idea, but I felt that today it is still good to start looking and start investing for long term for Singapore equities. Okay, so this is the link where I present a topic to through Hong Kong at this comfort of my home here, and yeah, so it's well participated to about 300 institutional investor. Why Singapore for the next 30 years? So watch it if you have the time. So I'm going to flip to the next chart. So I will recommend that you just take a snapshot. Okay, count to three, 2, 1. Okay, gonna move on to the next chapter. Then we're gonna take on the Q&A. So I have maybe I'm gonna give me another 5 minutes. Then at least we have the next 25 minutes for some quality time Q&A. But I do hope that you can ask me about China market, because this is something that is part of in my bag as well. Okay, now, so what asset classes to invest in the current environment? And for those that missed the first part, the current environment where we have been discussing tonight here is that the potential rise of US interest rate. And it's not just once, but inflation pressure are great, but I think it will be greater. So once the pressure comes, the Fed will have no choice but have to hike the interest rate. But I hope that, of course, they won't continue to hike, but sometimes it's not by choice. They have to do it. They will have to do it. If the inflationary pressure is too strong, they will have to have a subsequent hike, and that will not be good for the capital market. Okay, so now you see where's my positioning today, and what's the reason why I prefer to be a bit more nimble with my US position, but I want to stay put for my Asia stake here. Okay, so now, so basically, in this constantly volatile market, and the volatility have not really comes yet. Okay, the gray rhino is there, but it have not triggered yet. So basically, in this environment, once it trigger, even right now, we got to start practicing is that we constantly try to rebalance. Rebalance is our best defense against sudden market downturn or volatility. Now, the thing is this: if your personality as an investor is that, no, Konghao, I'm a passive investor, that's fine. That's who you are. Okay, there's a lot of passive stock and good stock that don't move up or down, but they'll receive income. And Singapore market is one of the best income stock that you can find in the world. So now, if you're passive, then stick to income stocks. There's plenty of those income stocks in Singapore. But I would urge you, if you also participated investing a little bit more broadly, don't be passive, try to be a bit more active. So when you're active, it means that you have to constantly rebalancing or switching from stock to stocks, fund to fund, region to region, instrument to instrument, rebalancing of equity again and again. That means you look at a fund, you try to tabulate and look at in the total quantum, where's the risk, all this and that. And today, I hope that I offer you a structure of how long you can invest in a particular stock or a market. Okay. So basically, if you're a long-term investor, I think my chip would be in Asia for long-term investor. Okay, for tonight purpose, with a broker, and definitely is also part of me as well today. Okay, I would like to focus on stock, unit trust, ETF, and some businesses as well. In terms of uncertainty, I like stocks the best. Why? Because they are small. Compared to property is a huge investment, but stocks are small. I can change my mind if I see something the macro environment have changed, and also confirm with a chart, my behavioral science analysis. It confirmed that, kind of double that as a confirmation. I can quickly offload that stock very quickly. I can be very nimble about it. So in the time of uncertainty and volatility to come, and you know that you will come, to me it's like a time bomb, right? I like stock because I can be very nimble with it. Nimble means that I can get in, I can quickly get out fast, provided invest in those liquid stock, okay, unit trust, ETF, and businesses. If you find that a particular market or stocks is you want to classify as a short-term investing, means that you hold for about 3 months to about 3 years. That's your plan. You invest now, you want to hold to about 3 months to about 3 years before you take profit. Then stocks, ETF, maybe not so much on unit trust, stock, ETF, and derivative, I'll use it as a hedging. Okay, because sometimes I may get stuck with my stock. Then I may use derivative to sell short first, then hold on for a while, then before I do some unwinding. So you can explore into that if you like more complex investment, but don't have to be complex to make money. Okay, so sometimes just be simple, identify one or two market, then place a chip there, diversify a little bit, and to me that's good enough. Okay, take some risk. There's always risk involved. Okay, so now I will highly recommend ETF. Say for example, recent weeks, there's a lot of friends ask me, hey, Konghao, do you think it's time to buy China? I think so. I think so. So now, how to buy China is that, well, what stock to choose? So some of us may not be too sure what stock to choose, but one of the best bet, I would say that go to the exchange. You look at an ETF. That this ETF screener, I think they're quite useful in different country. Sometimes I flow to different country, but if I like China today, I'll look at China. There are a few options of the China ETF. Study into their prospectus and decide which ETF you want to buy. Okay. So with that, I think I'm good. We have a time of Q&A. We have the next 25 minutes, but definitely we're not going to be at 25 minutes because the system will auto shut down by 9 p.m. So yeah, so you can submit your questions. Then I have prepared some Chinese stocks where, or rather the Chinese market, where is the Chinese market today? Of course, if you're interested in invest in Chinese market, you can always consider through SGX with CIMB, the ETF, the Chinese ETF, China ETF, and also some of the structured product, the structured warrant that they have as well. Okay, so Nixon, do you receive any questions so far, or do you have any question for me for start?
Yes. Okay. Thanks, Konghao. We are doing very well on time, no worries. So I think we have ample time. Before we start the Q&A session, just allow me to share screen. Okay. All right. You see my screen here, the survey. So I would just like everyone in the webinar to just participate in the survey. Of course, as part of the $50 Takashimaya voucher, by doing a survey, you also gain points towards winning that voucher. So on the right-hand side on your screen, you can actually see the survey button. So we really appreciate you to just click on that and fill up some simple questionnaire. This is to allow us to understand how this webinar is going and for us to do better next time. And yes, Konghao, the next thing is we'll go to the Q&A. There is actually quite a few questions. So allow me to just put the questions to you. Okay, let me open up my chat and take a look. Okay, there's this question. Talk of China-US trade war seems to have dwindled. Do you think it will still have an impact on the greenback value and interest rates?
Yes, I think it's a very good question. So definitely, no, the trade war to me started in 2018 March. I think it's only the beginning. The world, it's not just trade war between US and China, but I think the trade war, those who they are protectionists. They are trade war between nations right now. So I think the trade war just started, right? So definitely the market is going to be very volatile. But let me just sidetrack a little bit. But I think volatility is good because volatility brings forth opportunity. So that's what I see. So I hope that you also enjoy volatility as well. Now, will that impact the greenback, which is the US dollars and interest rate? I think it has already impacted and it will continue to impact. Because of the trade war, it seems that it the trade war started by US, but I do not think that helped very much for US. Um, in fact, I think there's some report shows that the trade war started, but you have not really helped US much in terms of the economy. So, but I think it brings forth self-reliant for Chinese market. So over the last, I think 1 or 2 years, you could see that the Chinese have campaigned that they promote internal spending, and I think they are pretty successful. They are quite they're quite self-sufficient in a way. So itself is an economy, right? Now, so will that impact the greenback? Definitely. If you look at the dollar index over the years, since that the trade war started, in fact, the greenback has not been doing well. I think if the trade war is going to be continuous, the US dollars will not be in a good shape, especially just now we discussed about the US. I think seems like the only method that they could sustain the economy is continuous proposed bills so that the Fed will print money to support the bills. So it's good, it support the market, but it will lead to something else, which is earlier we described about. It's not just trade war, but it's also this more of the printing of money by the Fed. It will weaken the US dollar. So this is no need to dispute about it. When you print something, it will just dilute your currency. So to me, it's a fact. So yeah, so I think that's a good question. And yeah,
Can I just add on that? So what you see is that the greenback will actually, in a longer term, fall. But also at the same time that you are projecting that the interest rate will rise, correct?
Okay. I know where you're driving at, Nixon.
Yes.
Yeah, because I think we have known each other for about 10 years, so I can read into your mind as well. So basically, I think Nixon, Nixon tried to tell me, or maybe ask me this question is that, hey, Konghao, if you find that greenback is going to fall and inflation will come, but the Fed could increase the interest rate. So when it increase the interest rate, will it also attract the US dollars to strengthen? Yeah, I think that's the
Exactly.
question, right? So
Yep.
are you contradicting yourself? Not exactly. Okay. Now, this is what the Fed trying to do. Okay. If the US dollars fall too much, inflation pick up, they will try to don't let the US fall by how? How they going to do it? One thing is to increase interest rate. Because when increase interest rate, naturally you want to park money in the bank, right? Let's say US, you want to park money in bank because it pay you good interest. Now, to counter a weakness in US dollars, Fed, one of the matter is that Fed will have to increase interest rate so that to preserve the value of the dollar. Now, this is what Fed hope to do. Let's say the day come where US dollars being depressed, they will hike the interest rate to protect the US dollars. Now, the thing is this, you have to understand that this is what the Fed trying to do. They will use this to protect the dollar. Now, my question to you is that what if it failed? What if they increase the interest rate and it doesn't stimulate for US dollars to strengthen? You have to understand that who is holding the majority of the US dollars. It's not US alone. US dollars is a reserve currency. Reserve currency means that a lot of nations, institutional investor are holding the US dollars. Now, the Fed can increase the interest rate, but what if it doesn't stimulate for investor to buy the US dollars and US dollars continue to under pressure? Then what will happen? Then the investor around the world that holding US dollars will lose confidence. They will kind of sell, and it may not happen. Okay, so you have to understand that it's not the interest rate that take dominance. It's the US currency around the world, the investor holding it that determine the strength of the US dollars. Interest rate is just a tools they hope to achieve, but whether they will be successful, we will only find out. Okay? So, yeah,
Yes,
thank you for
I
the
see.
question. It's very
Yeah, it's a
insightful.
very delicate balance there, right?
Yeah.
Okay, the next question. What are the telltale signs that the stock is about to enter the growth stage, and how can we tell if it's a false start?
Okay.
I think it's pertaining to your chart. You may show screen if you wish to.
Okay, maybe I show my screen.
Yeah.
Let me just move
Sure,
on to
just
the
go ahead.
China market if you allow me to do that. Yeah.
Sure.
Okay, let's look at the China market. What is the telltale signs that the market is head towards a growth market? Okay, so it's a combination between when we're starting the chart. Honestly, we're not just doing technical analysis. We're studying into the behavior of the whole market. So you have to understand. Of course, when you study in technical analysis, there's a few layers. The majority will just look at very mechanically, they are very faithful. But I want to challenge you to move beyond that. Look at chart as study into the behavior of the whole market itself. Okay. Now, about China market is this. 5 years ago, by now it's 5 years ago, okay? In 2016, June 28th, in 2016, I just came back from Hong Kong. I published this blog. I say there's 3 key reasons, time to look at the China market. So back then I was in Hong Kong, I presented to a group of fund managers. I asked them that it's time to look at the China market. It didn't sit very well with them. They say, how can you look at China market? So it didn't sit very well with them. But anyway, look at what happened today for the Chinese market. Okay, that was July 2016. Okay, so July 2016 was here. Then today, China market, it reached a high of 20,000. So some of the fund invested, in fact, do better than China A50. So China A50 it just is a benchmark measure the A stocks, the best 50 stock of A stocks. So some of the fund I invested did about 3 times better since I threefolds already. So these are a short dip that we experienced the last few months. Now, your question is how to identify from income to value, especially at the beginning of the growth stage. Now, let me just tell the story, my experience for China stock back then. Okay, so now China stock, you could see that since the start in the 90s, the Chinese indices, the stock market started only in the 90s, even after Singapore and Hong Kong. So they're late bloomers. Okay, so they started in the 90s, and from 90s until about 2014, it's about there. The stock market has not really moved much. So I classified that as income stage. But something happened. Now I mix with a lot of stories, but the story is not just I tell you a story, is a story for we to digest. Okay. Now, so be willing to understand what's happening around the world, understand politics, all this and that. So now what happened here was why the market surged in 2015. It was for the first time China want to open up the world investor to invest in China. So how they do it is that through Hong Kong, they have this, I don't know whether they still remember, Hong Kong and Shenzhen connects and Hong Kong and Shanghai connects. So I was there. So yeah. So when it connect, the market boom. Yeah. So you have to understand from about 7,000, it just boomed to 14,000. That's double in a very short time. But back then, the Chinese market, the whole infrastructure are not ready for this boom. They never expect, and the market collapse is because of their system cannot handle the volume. So the market collapsed. Now, so this is the time where I felt that market suddenly surged. So I see value in China. At the point in time, 2015, it's not very long ago. Chinese is like all over the world. So I know that there's something mispricing about the Chinese market. So when it crashes, I just felt that at this point in time is a value stage, and truly enough, they enter into the growth stage. And I can tell you that it is still part of the growth. And I believe that if you look into a bit longer term for the next 10, 20, or even 30 years, I think many of us are still be alive, well, and kicking 30 years later. If you look at the kind of time horizon, I think we're still at the beginning stage of growth for China. So what happened to me is an opportunity for me to average up. So that's like what I say, whatever I present to you is for my personal consumption. So if you want to act on it, please consult your licensed brokers and licensed FA. So that's how I identified the whole growth stage cycle. Okay, let me see if the
Okay,
next
great.
slide.
Yes.
Yep. Okay.
Konghao, can I just follow up? Because since we're on China, actually, there's a couple of questions pertaining to China. So I thought it's quite relevant. So there's a question of, let me look at that. Given the current volatility, that means China clamping down on the tech companies, the Delta variant of COVID in China, should we still focus more on growth stock or value stock for the second half of the year?
Okay. So you say you are second half of year, then you got to ask yourself this question is that, then likely I think if you're focused on second half of the year, you are between a short-term trader and short-term investor. Now all this makes sense to you, right? So whoever that asked me the question, you are a short-term investor and short-term short-term trader and short-term investor. I do not know where's your line. So you got to identify. So definitely, if you find that, I find that at this point is a buying opportunity. If you are a short-term trader, so definitely you may want to apply stop loss because you are a trader. It seems that you're a trader to me, or short-term investor. You are partially a trader as well. So you may want to apply a stop loss because the meltdown was quite deep, and means that if you believe that the low has been established, you want to buy now and make sure that since you only focus on one quarter, the next quarter, if you really swing up, you also have to take profit because that's who you are. You are a short-term trader or a short-term investor. I am, for China, main part of it, I'm a long-term investor. It means that I've already invested 3 years or more. I want to continue to invest into longevity. And in between, I don't mind to have another portfolio to also trade short-term as well. So if you want to function as a short-term trader, I find that the recent low seems like juicy enough for me to get in a position with a measured or calculated risk if you belongs to a short-term trader. So that's what I feel. Then your second question about Nixon earlier mentioned about the Delta variant and also
Yes.
the recent clampdown, right? How would that going to
Right.
affect growth stage? To me, it's an opportunity for China. Now, this recent meltdown that we witnessed over the last 2 weeks for China market is not because of the Delta variant, because the Delta variant for Chinese seems like, according to their population of about 1.2 to about 1.3 billion, their numbers are very comforting. Means that the Delta variant, even today, I think is very well managed, so it doesn't affect them that much. But is the recent clamping down of China, what is the deep impact it's going to bring for my that long-term investment position? So what is I'm more concerned about my position than the audience as well. Okay, let me just share with you my intake. Hey, this is what I shared on my Facebook page, okay, my Facebook page. I say that, allow me to just read very quickly. What is China crackdown on this company all about? I felt that it's better to do now where China economy is entering into a new phase of growth stage. It's still at the beginning if you look at the long-term perspective. So I say that, in my opinion, the crackdown brings security and social stability to consumer and workers before the companies grow too big. It is time to set structure that's fundamentally right. So what happened in China is that they saw Facebook, they saw Google, they saw all this big company, how they have monopolized the market. And they do not want their Chinese company to, in the future, grow so big that the government have no a shadow hand to watch over them because they're too big to control. So they do not want that. I suspect. So as an investor, you have to read and try to make assumption. Okay. So now I say that is this recent clampdown come in very hard and strong. But I felt that it is a short-term pain with volatility the market are experiencing today, but it's a long-term benefit for the ecosystem between the listed and unlisted company, employees, and consumer and investor. Why? Okay, let me just give you two examples of the recent companies crackdown. To me, is a good equal growth to protect the employees, consumer, and investor. Okay, now the first example is on all the educational companies. Now, so all these institution offering tutoring on schools curriculum will be registered as non-profit organization. Means that what the Chinese government do not want to see is that they do not want the tuition center to make a profit from those core academic subject. Means that if you're going to tutor math, science, Chinese, all these are core subjects, right? They do not allow the tuition center to profit from it. You want to charge to cover costs, fine. So that now at the end of it, you look at it is that it will protect the who? You'll protect the parents, the consumer. So the whole society will not be so stressful. But all these tuition center, you can charge and make profit from those extra curriculum like music, arts, dance, maybe business, English. You can charge high price, they don't care. But in core subjects, you can't. Because I think they study about other countries, how stressful the Asian parents are. They do not want their parents to be that stressful. Now, on another example, and in fact, there's a lot more, on the delivery company. New rules were being issued to protect the hard-pressed driver. Now, under the new guidelines by China regulators, the firm have to ensure that the workers' income and minimum salary level. These new rules also say company must appropriately relax delivery time limit in notorious fanatic delivery sector. You may heard about some of the in Korea, those people work so hard. delivery. They're delivery men, and they die of hard work. They die of fatigue. So I think is in Asia culture is very strong. Everybody, I want my food now, now, now. So I think to me is what they're doing is they're setting structure correctly. So at the end, it's a short-term pain, which now we're experiencing some volatility. But I think structurally, they're doing something good for the consumer, their people, and ultimately investor. So to me, this dip, uh, the recent dip can be one point of entry for me as a long-term investor. But if I'm wrong, it continued to dip, never mind. I already make my entry today. That means average up already. But if I'm wrong, it continue to go down. I will look for another 5 points to buy again. If the core belief of what I believe in China in the next 30 years have not changed. One of the core belief I believe in China today for long-term investing is that look out for their digital currency. I think it's something very interesting. So, yeah, maybe that will be another topic for another time. Okay, yeah, we have the next 6 minutes, so it's so
Yeah,
exciting.
okay, no worry. Actually, there's a couple of questions on China, but I think more or less, Konghao, I think you covered most of the queries about China. So
Yeah.
maybe I should pick a question that is a bit different. The question is, I do not see commodities being recommended as an asset, even though inflation was frequently mentioned. Any thoughts?
Commodities, yes, you can consider hard commodities like precious metal if you like to. And even for softcom, so sometimes we may not be too familiar, but I think the good news is that earlier I also mentioned one of the asset class is called ETF, right? Or some of the unit
Right.
trusts, they do have fund managers invest in those commodities companies. So you choose that unit trust that they focus on commodities if you want to, or the ETF focus on resources. So you go and ask your broker, who is CIMB, give them job to do. So yeah, so their broker, they're supposed to help you to shortlist, right?
Yes,
So call them
approach your
up.
trading representative.
Yes,
Yes,
call them
definitely.
up, give them a job to do. They're supposed to serve you. So keep them active. So say I'm interested to invest in commodity ETF. What are the ones? So let them give you a list. Then you study through the prospectus. If I invest in commodity, what are the types of commodities that's available? And gold, precious metal, and even for precious metal, there's a lot of type. There's physical gold. If you want to buy from the bank, you could do that. Okay, you can buy the paper gold, ETF gold, or even you can invest in companies that focus on precious metal. There's all sorts. If you're interested in commodities, there's a lot. Yeah. So, but you don't have to take, you don't have to stockpile the physical soybean in your storeroom. I don't have to do that. Yeah.
Okay, maybe I'll just take one more question. This one would be something different. So other than the China market, should we look into India market? So I guess India or other markets beside China. Any thoughts, Konghao?
Um, of course, within India, there are good companies. According to the benchmark, if I look at it, Nifty, um, is in a growth stage, but is somewhere in the mid-level to the last stage of the growth stage. For US, is also in the growth stage, is in the last few stages of the growth stage. But for Chinese company in Singapore market, or for Singapore market, it have not entered into a growth stage yet, by the way. It's still at an income stage. But for China, it has crossed over to a growth stage. It's at the beginning of a long-term growth. If I'm referring to that quadrant, if you are a long-term investor, okay, so I want to get it right. So now you know that. So clear that once you have an identity, then whatever investment you must have an idea how long is the term. I'm talking specifically for long-term investor. Now, if you want like to invest in India, definitely then you've got to drill down into individual companies. Okay, so as a benchmark, earlier I said that it's in India growth. It seems like quite matured, unless structurally they are there, but the kind of I would say that the how they handle the COVID-19, I'm not too impressed by it. So I think that structurally there's still a lot for India as an economy to work on, but that also bring forth opportunity. So I think India itself, yes, there's individual company, they are good. So you may want to drill down individually to look at the individual company. So maybe tonight what I share is useful to you,
Yep,
identify
yep.
which is the profile. Then after that, you drill down into individual company to study where they are right now. Are they the income, value, or growth stage? Then you put in your stake. So
Okay,
okay,
thanks, Konghao.
yeah.
Yes, thanks a lot. So I can see that Konghao is sharing his contact. So if you guys need to contact him, please take note there, his email address and his website. I think there's a lot of resources there on his website as well. So do take a look. Allow me just to wrap up quickly here in the interest of time.
Maybe just very quick one.
Yep.
I post insight on my Facebook page every day, sometimes even weekend. So please like or follow it. You'll be blessed. So sometimes I even post a market direction as well. So with a disclaimer, definitely. So do visit them, like or follow it. So any question, what I shared tonight, it fascinate you, you want to drill deeper, you can email me to konghao@webedia.com.
Yes,
Of
yes.
course, you can go to webedia.com. You can subscribe. Then in coming webinar with CIMB or my
Yes, we have
market
another
street.
session on the 25th of August. So
Yeah.
we'll see Konghao again.
Yeah. Do subscribe and I'll invite you back for the coming session. Thank you. Okay. Nixon is all
Okay,
yours.
let me share. Yes, thanks Konghao for that great sharing. Okay, let me just remind everyone to do your survey. It will help us to help you to bring better webinars to you. So don't forget that we did the Q&A, and just want to have a quick preview of what's coming up. So on the 25th August, we have the second webinar of Learn from the Pros. We are delighted to have Konghao back with us again on 25th August. So do register for the webinar. And of course, we have the webinar 3 and 4 coming up as well in the September and October. So do take a look at their website. Basically, the link is here from driven.cgs-cimb.com. You can go to the Learn from the Pro website. And this is the direct website to the Driven to Learn, where you can register for all webinars. And this is our social media pages for CGS-CIMB, so you can also follow us for any updates. And with that, I'd like to thank everyone for tonight's webinar. Thanks for your participation. A big thank you to Konghao for your very insightful sharing, and I wish all of you a good evening and a great week ahead. Thank you.
Thank you, everyone. Thanks, Nixon.
Thank you. Good night.